Hello and welcome everyone to the Wall Street Blockchain Alliance's Crypto Roundup for Friday, April 4th, 2025. Ron Quaranta here with my amazing co-host, David Brill, and our very special guest, the one, the only, Michelle Gitlitz. Michelle, welcome to the show.
Thanks so much.
Real quickly, for everyone in the audience on LinkedIn and on X, we'll be on YouTube as well. Thank you so much for joining us. If you've got comments for David or Michelle or I, please put them in the comment section. We'll review them as quickly as we can. And obviously, please keep in mind that nothing discussed is investment or legal advice. Everything really is our own personal opinions and not necessarily the opinions of our firms. David, we're back and we've got a special guest. It's great to have you. Josh can't join us. Something about the Gulf Stream out of commission, David. I don't know where she is at this point. Let's get right to it, David. We're back from our DC trip. We've got a lot to cover there as well. But the thing that's been blowing up my phone for 2 days are the markets. David, let's talk a little bit about it. Tariffs have hit yesterday, and depending on your point of view, it's Liberation Day or it's Apocalypse Day or whatever phrases that they're using. But Bitcoin's holding its own. David, what are you seeing in the marketplace this week?
Well, I think everyone would agree what we heard yesterday was above and beyond what people were expecting. And I think that's why you're seeing the big declines. Mm-hmm. I think in some ways this could be Bitcoin's big breakout moment and where we decouple from the NASDAQ. And so while we see, the NASDAQ down 4% today, it was down 3% yesterday approximately, Bitcoin's holding firm here. And I think this is a good sign. I think one other thing people need to remember is now we have some news during the week, not on the weekend. So in the past, when we had bad news on the weekend, what was the liquid market? It was Bitcoin because it trades 24/7. So here, during a normal trading week, we're seeing the markets trade, not the crypto markets trade out of sync, but people can get liquidity from all places, and that means they're not selling off Bitcoin. So I think it's really important to watch. A couple of things. One is, how do we close today? Do we see a big sell-off in the last hour of trading? And then, what happens this weekend?
Right.
So my hope is that Bitcoin stabilizes in this range and that, we do see a positive decoupling in the market.
David, let's dive into that a little bit real quickly. We had data this morning. You and I often talk about the data and our viewers out there. It's not the data, it's the revisions. But non-farm payrolls this morning gave it 228,000. I think the consensus was 140. So I'm going to rip up the script a little bit, David. Next week, when the administration calls you and says they want you to be the next Fed chair, what are you going to do?
Wow, that would be quite interesting. Well, look, I think there's two ways to look at it, and this is a bit controversial. Yep. Ultimately, what do we want to accomplish? This administration wants to bring interest rates down so we can refinance our debt cheaper. So if we want to be aligned with that goal, you could look at lowering rates. But if you're sitting in Fed Powell's chair, and from his perspective, you'd want to raise rates, I think, here. He wouldn't say that, but I think he might intimate that, and he's speaking today right now as we're talking. So, ultimately, we've all been living on this big, expansive debt for the last 30 years. And I think this administration is trying to take a whack at that debt and that sort of debt-fueled living that we've had. The question is, are we doing it too fast? And the last thing I'll say is, I think people generally are okay with reciprocal tariffs. I think it's not always shared clearly with everybody what the goal is. And I think if they had come out a few months ago and said, look, countries are charging tariffs of X amount on our goods, and we're charging less than that. And so we either want to remove the tariffs or have an equal playing field. I think people generally would be okay with that. And I don't know if that message has come across.
I think it's a marketing issue, David, you and I have talked about. Michelle, let's pull you into the markets conversation. I always do this guest when the Gitlitz family office portfolio managers call you and they look at the market declines here. Are they saying we've got to buy, we've got to buy? I don't know if you're involved in the day-to-day, but I'd love your perspective on some of the chaos we're seeing.
So it reminds me very much of pre 2008 declines, and not as drastic as sort of when Lehman's and Bear Stearns went under, but people get, I think, nervous because you look at your portfolio and the numbers don't look very good. And I remember that feeling in 2007, 2008. And a part of me sits here today and says, well, should I start buying? Should I go buy more crypto? Should I go buy more equities? Right. And another part of me says, is this the bottom? You just don't know. I'm a more of a long-term holder. And I think that depends a lot on age. Right. So I feel like I can ride out this cycle. I'm not sure if today is the opportunity. I remember thinking to myself when Solana went pretty low, I was like, well, that's an opportunity. That felt like a very definitive opportunity. But again, we're not giving investment advice. I'm just saying it's a very personal decision. And I think you do need to look at age and your portfolio. But a lot of investment professionals, particularly as this asset class, likely continues to move into, regulated everyday entities like Morgan Stanley and those types of players, their view may be it's good for a certain percentage of your portfolio, a relatively small percentage to be exposed to digital assets if you have that risk tolerance and if you have an age where you can ride those cycles, et cetera.
Michelle, I'm with you. Every time I think we've hit a bottom, I've got to remind myself that means I'm wrong, and there's probably another bottom. David, I wanted to go back to you on something, and you and I speak about this very, very frequently, this kind of digression or divergence between crypto markets and macro markets. And I don't even know what the S&P is now, but I think we're in bear market territory year to date on the Dow, the NASDAQ, and the Russell 2000. But we're looking at Bitcoin holding its own. We're looking at Ethereum and XRP holding their own. And David, even in the face of VIX, I think we touched 45 on the VIX earlier this morning. Yes, I was looking at the VIX at 5 a.m., which is frightening. We're settling in the 36 range. David, how is it possible that we're risk on for BTC or ETH and VIX in this marketplace?
That's a great question. I think that the holders right now in BTC are long-term holders. Mm-hmm. I think that people are getting allocated this, and maybe some of the BlackRock funds, they're not selling their BlackRock funds, and those BlackRock funds include, a BTC allocation. Look, Bitcoin's still up 20% since Trump took office. So I think we do have to be aware of that. I mean, we had a huge move up to like almost 110. But when Trump came into office, we were around, I don't have the chart in front of me, I think 73, around there. Yeah. So we're in the 80s now. So maybe we're at 70 when Trump took office. So we're sitting on a 15 to 20% move in, 5-6 months. I think people would take that. If you said it to somebody at the beginning of the year, in these 6 months since Trump took office, we're up 15 to 20%. I'd sign up for that.
Right.
Sure, everybody would have signed up for 40%, at 110, but I think we're in a good place. And so I'm really, really curious to see what happens in the next, couple of trading days and see if there is this stabilization in Bitcoin versus the traditional market.
It is a reflection of the stability, David, of the U.S. marketplace. Again, when we look at these payroll numbers, it'll be interesting to see again how that plays out. And you're right, the Fed is in a tough position. You don't want stagflation, and it's that fine balancing line. In the context of all of this, David, you and I and so many members of the WSBA were in Washington, D.C., and we'll get to that in a moment. Really good conversations. And for everyone in the audience, you've not lived until you've watched David Brill hold court at SEC, Crypto Task Force, and so many others talking about crypto and securities law. It was a great series of conversations and great expertise at the SEC. Michelle, I wanted to pull you into this because one of the conversations you and I had the other day, in the wake of everything that's happening in Washington from a regulator perspective, one of the things that I fear is getting lost in the media dialogue is state activity. And you're kind of that expert on state activity. For everyone in the audience, WSBA members have a Slack channel, and Michelle's been posting about some of the state updates. Michelle, for the audience, give us a picture of in the aggregate, what are state activities looking like in the crypto space, and why is that important?
So I think it's a really, really interesting time for people like me who practice, at the state level, and for entities who are regulated at the state level. Fundamentally, we have a dual banking system, and so there are federal pathways, but in terms of money transmission and payments licenses, the way that the Circles and the Coinbases and the Krakens and the Venmos and all those sorts of providers of B2B, P2P, web-based or app-based movement of money, we're really seeing a lot. At the federal level, they've tried to many, many years ago have a fintech charter and things like that. But ultimately, that was never successful. And the states, in particular, the Conference of State Bank Supervisors, are very protective of the state regulation over money transmission.
Right. Michelle, it's funny, you brought up this the state organization of regulators. I know I'm mangling that. We recently responded to Stable Act in DC, and it looks like some of the state banking regulators have been critical of that. Is there merit to that perspective in your mind?
Yeah, I think there is merit, and that's a very, very powerful organization. It is a conglomeration of all the state non-banking institutions who the state authority has always been to regulate those non-banking financial institutions. Again, these are institutions that are receiving, among other activities, receiving funds from person A and transmitting those funds to person B, or in the case of crypto, receiving fiat or crypto, converting those funds to another coin or to another source of value, like taking crypto and converting it to fiat, and then transmitting that value, we'll just call it value, to the same person. Maybe it's David moving fiat to Coinbase, and then Coinbase is converting it to USDC and depositing it in David's Coinbase wallet, right? So it's still the same person, but two different locations, his bank account to his crypto wallet. Or it's receiving David's money, fiat, and transmitting fiat to me, like PayPal. And so that the states have always been very protective of that authority. And whereas at the federal level, they're very focused on anti-money laundering, know your customer, and to some extent consumer protection. That's a conversation for another day with what's going on at the CFPB. The states also very much care about anti-money laundering, know your customer, and sanction screening. But what they really focus on is consumer protection. When David sends the funds to Coinbase, do his funds get to the place that David wanted them to go? And these laws date back to like your Western Unions, right? Western Union took your funds, or MoneyGram took your funds, and did it get to your cousin in Spain, right? Or where else they had a location. And so the states are very protective of that activity because David's in Florida. And if David's money doesn't end up at the destination, David needs to be able to call someone. Maybe he calls the entity that was supposed to be engaged in the money transmission, and he doesn't get a response.
Yeah.
Well, then he needs to be able to call that entity's regulator in the state of Florida, because David is a Florida resident. And it actually doesn't matter where David makes that purchase. He could make that purchase in Alabama, or he could make that transaction in Alabama. He can still go to Florida and say, I've got a problem.
Michelle, David usually moves value in 9-digit increments. It usually pops up on a Bloomberg terminal someplace. But I do see the point. Michelle, given all of that commentary as well, and we appreciate that. The other aspect that we really, David and I and the group in DC focused on when we had these conversations, obviously there's a legislative angle to all of this. And when we see what's happening in DC and we analyze that and try to understand what it means for the crypto market. Again, the other side of that is the legislative perspectives from states. And we see Wyoming very active. You had mentioned currently Illinois, I believe it's Texas. There are some others. What are they moving forward on, and why is it so important for them to move on some of this legislation?
So generally, as the federal government pulls back, the states and the red states, actually, not just the blue states, tend to be more avid enforcers because they want to protect their state constituents. And so what we're seeing some, I think, pain points potentially, but we're also seeing some opportunities. So for example, there's been a few states that have created legislation that would exempt mining and staking from money transmission or banking activities. On the other hand, we saw Arkansas propose a bill that would include mining and staking as money transmission activities. So, if you are in the mining or staking business, it's good to know of what's going on in different states, because if you have users there, if you are there, that's important. And on the state level, in my experience, it's best to reach out to those people in Arkansas who can help you if you want to, oppose something in Arkansas, versus having someone necessarily in DC who's going into Arkansas because they're not as familiar as how it works. There's a bit license type bill pending in Connecticut. A bit license type bill is likely to pass in Illinois. And so, those are jurisdictions that even to get your money transmitter license today would be a lot simpler if you were involved in crypto than it will be in terms of if those bills get passed. I think there's a bill pending in New York about specifically targeting advertising and disclosures related to virtual tokens. And on the other side of the coin, there's a bill in Texas for oil-backed stable coins, and we have Wyoming launching its own stable coin. So it's really interesting. In addition, and I flagged this for one of my customers the other day, some of the states have legislation targeting the fact that they want the state to be able to invest in tokens as part of the state reserve. And so potentially, depending on how the state defines cryptocurrency and what it's permitted to invest in, that may be an opportunity for token issuers. In addition, there are states that have proposed legislation about being able to seize crypto assets in terms of a forfeiture actions by the state. That's really interesting to custodians, right? And so if I'm in any group of those sort of businesses that it touches on the regulation, and I'm a custodian, and I find out that Mississippi is going to change their rules, well, maybe I want that bill to pass, and I want to talk to Mississippi because I want their business to be their custodian. So there's really a lot of opportunity and also concern.
Michelle, thanks so much. David, weigh in here. I want to go back to our Washington trip, and I want to weave it into the states conversation that Michelle's really given us. David, when for a dummy like me, when we look at the changes happening at the SEC or the commentary from the OCC, when we look at federal perspectives on crypto, let me ask this question of both of you. Michelle, David, are state regulators looking at federal actions and saying, well, this might be an opportunity? Look what the OCC said. I'm just trying to frame what's the knowledge base for state regulators given some of the changes in DC? And that might be an ignorant question, Michelle, but do you see where I'm going with that?
Yeah, I think it varies by state. In a lot of the federal actions, like for example, the BlockFi action, that was actually brought by the states, New Jersey being one of them, as activities that the state found violated state securities or money transmission laws that was referred to the federal government. So sometimes it's actually the reverse. In addition, I think the states who are enacting or trying to enact new crypto legislation, sometimes they look at federal definitions like of digital wallet definitions or payment instrument definitions. Sometimes they don't. And sometimes you see legislation where you say, I don't think they're intending to cover virtual currency, but the way that the legislation is drafted We have that issue in Pennsylvania right now with SB 202. The definition of payment instrument and virtual currency being encompassed in that definition could bring in, likely unintentionally, non-custodial crypto wallets that are not currently regulated.
Right. David, weigh in on this. I want to make sure I pull you into the states, federal, and all things regulation conversation.
So I have a sort of, more global view on it. Not that Michelle doesn't. She has the knowledge clearly on a granular level and on a global level. I think that we really need to have more of a federal view, because if companies want to do business in the U.S., if they're able to get a federal charter, I think that is more helpful to see adoption than the state-by-state approach. I mean, I've helped multiple crypto exchanges get licenses, both in the U.S., and it is a painful process. It has gotten a little more streamlined over time, but the process to get money transmitter licenses really still comes from the real estate world and using the real estate rails sort of to get those licenses. And so I think that it is not helpful to have more states have individual state licenses, because the compliance costs and the cost of doing business and the time to do business just becomes longer, and it stifles, in my mind, innovation. The one thing I will say is that I do think that the states bring some important consumer protection ideas to the table, but our regime here is really something that stifles innovation for foreign companies that want to be here, and for crypto companies, because this 50-state process is very time-consuming and very expensive.
Michelle, is David wrong?
Well, I'm so glad David actually raised the concern, and I agree there is a concern, because it is a time-consuming and onerous process. Here at Change Agents, I'm not practicing law anymore. I'm building a software company because I did work at a regulated payments company in the crypto space, and I experienced those pain points. We have such sophisticated AI and automation tools that here at Change Agents, we really can streamline that process and make it a lot more cost effective and efficient to both obtain your licenses and maintain them, and not only maintain them domestically, but maintain them globally. Or if you have your US licenses, you can more easily populate the forms and disclosures that you need to obtain your international licenses. On the onerous part, it sort of is what it is. Elon Musk and X have been gradually getting their payment licenses for years. I would think that Elon Musk might be in a position to understand whether there's going to be a quick path forward to a federal charter. I don't know what he knows, but I've seen him getting these licenses for X for over a year.
Yeah.
And if he's willing to do it, and Venmo's willing to do it, and Coinbase and PayPal, I think the pain point, this is state regulated activity. Not that it can't be federally regulated activity, but it is state regulated activity. And the Conference of State Bank Supervisors does work very closely with the federal government. And when you see CSBS opposing certain federal regulations, that holds a lot of weight. In addition, the Money Transmission Modernization Act has been that's a model act that has been adopted by, in full or in part, about 25 states. So we are getting some streamlined laws across the states. And so the requirements that you generally need for one state, if you're under the MTMA, are going to be very similar, if not the same, to the requirements of another state.
Michelle, thanks. Michelle's, for the audience watching, is weighing in on that comment from Raphael, a WSBA member, part of the associate team here on the Money Transmission Modernization Act. On the last part of that question that you addressed, Michelle, is true unification, right, from a regulatory perspective, is that even a possibility?
I think we're getting there, and I work very closely with CSBS and the Money Service Business Association. Um, they're doing a lot of important work, and I would say that, there I believe there will be harmonization at some point. Again, this is at a state level. Every time a state is considering enacting the MTMA, there's a bill in that state authorizing those activities. And if we want uniformity, then people might consider, if they are residents of those states, supporting these types of bills. And if you don't like something in the bill, again, I work with experts in all of the states. I'm not the person to do your lobbying for you. I'm the person who can tell you what's going on and then connect you with people in those states who can help you. And it can be very, very effective. And it has been somewhat effective, particularly in California. So again, I do think there's going to be harmonization. I don't think anytime soon there's going to be a federal charter. And I think that if you want to get to market, don't wait for the federal charter. I would say get your licenses, because it can take anywhere between 3 months and over 2 years for certain states.
Michelle, I want to bring up, you mentioned some states, you mentioned California, you mentioned Illinois, you mentioned Wyoming. I just want to do a quick shout out for our friends Joe Sicolo out in California, David Pope at Wyoming, both WSBA members. We'll have to pull them in to the show here. And Michelle, we're going to be working on the recurring stablecoin and states conversation and webinar that we've talked about. Michelle, you and David are, in my mind, the Renaissance friends that I have. You're both lawyers. David's worked at startups. You start companies, Michelle, and I know you talked about change agents a little bit. You wrote a book. Give the audience a little bit about change agent. What's that kind of client base, and where are you seeing demand? And I'm going to let you plug the book a little bit, which I think is a really great book as well.
I appreciate that. As mentioned, we're a software company. We use sophisticated artificial intelligence tools within secure workspaces for our customers, and we use sophisticated automation tools. We are a platform. We are not to be used on your own. We are not TurboTax for licensing. We are meant to be, we are a fairly low cost software provider, and we work with your internal team, your compliance consultants, your lawyers, in a platform where everyone can collaborate together. Which, we need to stop emailing different versions of regulatory documents, and we need to be able to provide transparency. If David's the general counsel of a digital asset exchange, he shouldn't have his compliance team riffing through 5 different folders to find, what day he was granted a Florida money transmitter license. So we're really transforming compliance in a very innovative but very secure and privately permissioned workspaces. This is very close to my heart as someone who's experienced these pain points. And about 1.5 years ago, I published a book called Reimagining Payments, the Business Case for Digital Currencies. Not a legal book, more of a business book to sort of show people who don't understand why crypto could be important for payments, show them, here are the things you might want to consider, so that you don't think you're going to walk into Blockbuster next week and rent a video because Netflix is not now here. And that's what we're seeing.
Michelle, thanks so much. David, let's pull you back into the conversation as well. Obviously, the states level conversation will be something we absolutely need to focus on more going forward. I don't want to give short shrift to the DC trip as well, David. I'd like to weave some of that back in, and I'd love your perspectives. How did you see the tone and tempo of that conversation? We've been to DC every year. We're not lobbyists. We don't employ lobbyists as well. But I was heartened by the conversation, including the depth of analysis. David, what did you see when we were in DC?
First of all, it's great to see on a bipartisan level, members of Congress being interested and passionate about seeing these bills move forward. In the election, in the recent election, it seemed this was, more Republican backing, and the Democrats were kind of staying away from it. But I'm happy to see that we're seeing more bipartisanship. And I think the change in administration has helped that along. And I think that these bills that are moving forward are things that people want to see happen. And I think there's a good process both in the House and the Senate to move these forward. So to see that energy and that positivity is great. I think our meeting in the SEC was very productive. I appreciated the level of specificity that we got into as a group. And so it's great to go into a meeting there and not have to worry about the ramifications of having a meeting there, which a lot of companies in the past have had to deal with or were really circumspect or reticent to have. So I think, it's really ironic because even though our markets right now are, I don't want to say bearish, but in the bearish direction, I think if you were going to rate, the climate for crypto in the US, you really can't get much more than we've asked for.
Right.
And I think that we have bills in Congress. I think there's good momentum and support. So I think, it's a very bullish time for the space.
David, the depth of conversations, the SEC Crypto Task Force, shout out to them because they said some really interesting things. The depth of specificity blew my hair back, which was they really get it at a pretty in-depth level. I think the other thing that was really interesting, and Michelle, I'd love to hear you chime in on this as well. So many of the attorneys and colleagues in the crypto space for so many years have said, we've got clients who are afraid to come in and register. And one of the very specific comments, David, I won't forget it, was tell clients not to be afraid. The Wells noticed letterheads are locked away or something along those lines. Is it still a challenge, Michelle or David, to get firms that are interested in participating in the U.S. to have regulator conversations?
I think
I could. Oh, am I on camera?
We lost you for a second, but it looks like you're back.
Yeah, go ahead.
Okay, perfect. The states are different than the federal regime, to be honest. I have had very good and productive conversations on a confidential, no-name basis with a state. I don't want to say most, but some of the state regulators are very sophisticated and they understand this world and they understand what you're describing. Other states aren't, and they can't give you legal advice as to whether or not you can register. So I think I would always start off with a confidential no-name call to the state regulator and see how far I get.
Yeah, no, good point. David, the other thing I wanted to raise, again, on the Washington thing, there are other bills, there are state bills, Michelle, that we're going to be looking at. David, the other thing I wanted to raise, just to wrap up our DC conversation, when we look at Stable Act, when we look at Genius Act, again, stable coin is the conversation piece of the day. There's not a day that goes by for any of us, I think, where someone's not screaming about stable coin, what's going to happen. In this environment, David, do you suspect stable gets through over the finish line? Do you think Genius gets over the finish line? There are some differences between the two. We should probably spend some time in a future episode analyzing those differences. What's industry perspective on those stablecoin bills?
I think people are very bullish on the ability to get something approved this year. I do think there's some important issues that need to be addressed. I think one thing that hasn't gotten enough attention is yield-bearing stable coins and the potential restriction in these bills on yield-bearing stable coins. I happen to think personally it's very important that customers should be able to see the yield from these stable coins. And so, if a stable coin has a 4% yield, if it's fully backed 100% by treasuries or other, whether it's dollars or treasuries, I think it's important that customers that use stable coins get the benefit of them and the yield that comes with them. When you look at savings accounts in the US, a regular savings account, unless you're locked up for a period of time, is, sub 0.25%, I know, Ron, you have that private client relationship at Citibank.
It's a tough road, yes.
So you get the most preferred rates. But all kidding aside, unless you tie up your money, you're not really getting any kind of meaningful interest. And I think this would be an important opportunity to allow people to get some of the yield that these stable coins provide. So I think that is one thing that still needs to be addressed. One other thing is that I would like to see more regulation at the federal level. I think the states would like to see more of it at the state level, and I think that's going to play out And there might be thresholds on dollar thresholds or activity thresholds, but I would like to see things more at a federal level, because like Michelle said, I mean, I think there is progress made on the state level, and I think the states do add to the, on the consumer protection side, but, working and representing big institutions, having to go, especially if they're overseas, and having to go through this process, it just really hinders innovation. And I think there's a benefit to getting the licensing on a federal level.
David, Michelle, from a state and federal level, I guess the question would be for those who may not know, what are the kind of regulatory impediments to yield-bearing stablecoins? Like, what is the perspective at the state or federal level that makes getting those over the finish line a little bit difficult in your minds?
Well, I'll go first, Michelle.
So I think at this...
Go ahead. Go ahead, Michelle.
At the state level, I think you have to figure out whether or not that activity is regulated by the state. When I was at the state conference a couple of months ago in February, the conference was focused on the money transmission regulators. When I mentioned stable coins, the regulator said to me, well, that you got to talk to the state securities people, right? So if you're launching a stable coin or there are stable coin activities, now you've got to think about, does the money transmitter regulations apply to me, or do I need to look at the securities regulations? Because one part of the state may approve your activities, whereas the other part of the state may not.
Right. David, go ahead.
And therein lies, some of the problem. Not knowing where it fits and having to deal with different parts of state agencies. And I'm really more aligned with a streamlined approach. And I think the genius and StableX are really, I think there's a lot of positive in there. And I'm focusing on the yield part because that is one area where I feel like consumers should really get the benefit of these. But look, I do think the states have an important role to play. I just would like to see it more federally based.
David, Michelle, thank you both so much. For everyone in the audience, again, thank you so much for joining us. If you have questions for David or Michelle or I, please hit them up in the chat, LinkedIn or X. We're happy to answer them as quickly as we can. David, I want to go back to one thing, and Michelle, certainly pull you into the conversation. David, you and I often talk about interest rates. Michelle, this might be boring to you like normal people, but David and I talk about this stuff all the time. David, the 10-year treasury below 4%. Which one of the mansions will you be refinancing at a lower mortgage rate?
Well, Ron, candidly, none of the mansions have mortgages. So I hope everybody in the audience knows
We're totally joking.
We're just joking around. Look, the housing market, has been locked up because people have had these low, the folks who are lucky and, locked in rates in 2020 and 2021 are, sitting on 2 or 3% mortgages. And it's really locked up the market because other people looking to buy right now at higher prices are essentially paying double the rates. So I think a lower interest rate, that is, if the mortgage rates follow the lower 10-year, is really beneficial for the real estate part of the market. But we just have to see if one follows the other.
Michelle, if you remember my comment about the 9-digit transactions that David does, those are paying for the mansions, just to be clear for everyone. The other thing we didn't address, David, Michelle, I'm hoping we can cover a little bit of time on it. I remember several weeks back when the SEC Crypto Task Force took off, when we began to see the SEC begin to bow out of these suits. I haven't kept up in the past week, David, Michelle, but I'm curious. We all had this perspective in the marketplace that, well, the SEC is dropping all of these lawsuits. This is amazing. Crypto will go through the roof. Crypto's held its own, but that hasn't quite happened. David, Michelle, are there major cases out there that in your minds are kind of weighing down the crypto space a bit more?
From my perspective, the SEC's really moved the focus from, classification cases and market structure cases and moved towards the fraud cases. So I don't think any of the I think the majority of the big cases have been either settled or dismissed, and the focus more on the fraud side. So I think these are positive things for the market. I really think it's macro business issues right now that is sort of pause why we're not seeing bigger gains. But again, I really want to reiterate, we're up 20% since Trump came into office in crypto and Bitcoin in particular. So, I think people would take 20% in a year. They would take 40% annualized. So, it's hard to see 110 and be in the 80s, but we just need to have perspective.
Michelle, I know a lot of your work is states focused, and that's critically important. I'm just curious about your perspective on some of these big cases as well. I don't know how much of that crosses your desk, or how many of your clients have like a focus on the importance of some of those cases going away.
Well, I think some of the states have incorporated the message of dismissing cases, securities related cases. Right. I believe it might have been Kentucky or South Carolina, but there was one case that once the SEC withdrew the action, a state that had a companion action withdrew theirs as well. But again, as the federal government pulls back, the states tend to enforce. New York is very aggressive. Letitia James takes on a lot of companies, that she has taken on this industry, and she continues to take them on. And because of the Martin Act in New York, which regulates securities and commodities, you can't argue in New York necessarily that a token is not a security, because most of them, I think we would agree, are at a minimum a commodity. And so that can be a very difficult jurisdiction if you have employees there, if you have customers there. But other states, I mean, Texas is an aggressive regulator. California, we're hearing about subpoenas or requests coming out of California. So, this is serious stuff at the state level.
Michelle, let me dive into that a little bit more deeply, and David, absolutely chime in here. You brought up New York, and certainly the Attorney General there is active in some of the cases, and we understand the reasons for that. When you have new clients, or we talk about clients coming in from overseas, is it a problem, Michelle, to point out the state they should start in? That might be a silly question, but a lot of colleagues we talk to say, New York, get a BIT license, NYDFS, everything will be fine. How do you guide clients, to the extent you can talk about it, in those, what states do I get involved in conversations?
So, getting a virtual currency or a limited purpose trust charter in New York is a difficult and long process. For a new entrant, I usually say you need a CCO, an experienced CCO who has at least 3 years of experience at a money transmitter. And for a startup or a new entrant, that's an expensive hire.
Right.
It also takes a long time. So I never recommend starting with New York, but I also think, and I saw this when I was in-house, a lot of counterparties do not want to sign a contract with a company in crypto that has a New York address. I've seen, investigations at the federal level where most of the team is overseas, but there's one person in New York, and now we've got jurisdiction, right? And so, New York, it's my home state. I live here. I support it. I wish there was more activity at the state level. Like, can we get a governor in New York who can be crypto friendly? I mean, I wish that we could get someone like a Richie Torres. We see Josh Gottheimer, running in New Jersey. It has to come from the state level to create change in the state.
Michelle, let me ask one particular point of detail there. You said something really interesting, and I'd like to dive into it more deeply. If they've got a single employee in New York, how does the state, is it an actual employee? Is it a 1099 consultant? Is it someone working part-time? Like, how narrow a definition does a state like New York take of employee?
I think it depends on the regulator and depends on the scope of what the regulator is looking at. I think it depends if it's a federal regulator or a state regulator. So it's very dependent. But at the commercial level, it really gets into, some companies just won't sign a commercial contract with you because you're in New York.
Right.
And we're the financial capital, so.
Right. You'd imagine they want to, but it's dangerous for them to do. Come to New York. David, I want to pivot to you a little bit. We only have a few minutes left. Michelle, it's always good to see you. We'll have to have you back. We've got so many things we're going to be doing in the coming weeks. David, when we look at market turbulence, I want to talk about a couple of different things. And I half joked about you becoming Fed chair. I'd vote for that, but that's an entirely different conversation. David, are we looking at a future of stagflation, given some of the economic data you and I are seeing? You are on mute, or I can't hear you.
I'm going to hit the pause button on that question and go back to something Michelle said.
Okay,
so
go for it.
Really important what she said. New York also, the Martin Act also is a complication in litigation because the standard is different. The standard for culpability is materiality versus scienter. And so that lower threshold standard makes you more at risk in a litigation with the state, and other states don't have the Martin Act. So I think that's just another element to keep in play. And I agree with Michelle that, like, from a time-wise perspective, you couldn't, you wouldn't start with the bit license because you could probably get the majority of your licenses as you go through the bit license process. But
David,
I want to ask pose one question to Michelle. Do you think each state having their own bit license is productive, or do you think it's sort of going to just make it more difficult for crypto companies to operate in the US?
So that's a really interesting question. My understanding, and I would defer to Joe instead, but my understanding is that in the new California legislation that they're considering, or they have some reciprocity, that if you do have a New York license, that California might recognize it. Reciprocity is really interesting. Like, Rhode Island is one of the only states where if you have a money transmitter license in one state, it's like buried in the code, but there's a possibility that you don't need to actually register in Rhode Island. And I think that if this goes to sort of the question Raphael posed, are we close to achieving unification? If all of the bit license type statutes in the states are fairly similar, can we get to a point where I got mine in New York or Illinois or California, and then I can get reciprocity in other states because it's a higher standard and those states agree? And the Connecticut, the Illinois, they all look very similar to the New York one. There's some. So again, this is where the power you have in the state, and I'll give a shout out to the Illinois Blockchain Association and Nelson Rosario, like the work that team did to try to oppose the Illinois bit license, should be commended by all, right? Those organizations are the most effective when they hear from the constituents in the state or the people doing business in the state. The place where I get upset sometimes is if you're in the state and you're paying taxes in the state, you're there, you're a resident. So stand up and say, I'm important too. I need to have a voice too.
Michelle, David, thanks so much. Shout out to Dina, who commented, agree. I think she agreed with both of you, which would be a wise choice. Dina is one of our policy experts at the WSBA member firm, Paul Hastings. Dina, so good for you to join, and good to see you in DC as well. I noticed that David did punt on my stagflation question, so I'm not letting you get off the hook that easily, David. You and I text each other daily on economic or market data. Are we looking at a stagflation future, and what does that do to crypto?
I'll just note that when Dina Ellis gives you a compliment, you should just leave it there. When she says you say something smart, we should all just be happy. And if David doesn't want to answer your question, I think maybe Dina would agree.
Oh, Michelle, it's been nice knowing you. No, I'm kidding. That's a really good point. And yes, I fully agree with Dina that Dina's compliments are well earned and well worth it. So we can move on to something else. David, we only got a couple minutes.
I'll answer your question, Ron. I think
you see, Michelle?
I have no issue answering it. I just thought what Michelle was talking about before, and then I wanted to layer in the Martin Act analysis was really important for the listeners and to give them an understanding of why New York has this sort of broader reach with the Martin Act than other states. In the short term, I could see a world of stagflation. I could see prices rising as the tariffs sort of work their way through, our economy and sort of what rates are we going to charge and what rates are countries going to charge us. I do think that there will be some normalization over time. And so we may see some short-term pain, but I'm hopeful that we see some long-term gain. So I would take a wait-and-see approach. I wouldn't necessarily be scared off by some temporary stagflation. I think more structural stagflation would be, problematic.
So hold fast.
Look, I think for better or for worse, I think that people understand that this is an area that we should be addressing. I just don't think people expected it to be as deep and as wide as what we're seeing. And I think and the markets are definitely surprised by this because we've seen that in the last 2 days.
True. David, Michelle, thank you both so much. Michelle, we're going to wrap it up. It was so great to have you as a guest. If colleagues want to reach out to you or anyone watching, what's the best way to reach you and learn more about you and Change Agents?
Yeah, I'm at Michelle at changeagents.co, not com, changeagents.co. And our website is www.changeagents.co. And we're here to help. Thank you.
Michelle, thank you so much.
Love being here. Thank you for including me.
You'll be back. You're stuck with us, Michelle. We've been telling you that for a long time. David, closing comment from you at all? And I know I owe you a steak dinner. 15 people have already texted me. We will make it happen, I promise. David, closing comments, all yours.
I think people really should pay attention to the close today and how crypto reacts over the weekend and early next week. But if Bitcoin can stay in this range, even if it dips a little bit and the stock market continues to decline, this might be an important tipping point in the decoupling between crypto and the NASDAQ and traditional markets. So it's something, regardless of whether you're a trader or not, I just think it's really worth paying attention and just seeing the trends. So that would be my advice.
David, thanks so much. For everyone in the audience, we've got a lot coming up from the WSBA, our Crypto M&A webinar that David, somehow I managed to smuggle you onto. We will be doing sometime in May. Michelle, you and I will get on the calendar some of the payment stuff we've been talking about and pull in some of our colleagues that you mentioned as well. Everyone, thank you so much for joining. Everyone who watched, Dina, Greg, Raphael, everyone, thank you so much. We'll have the recording on YouTube as well as the audio on Spotify. We will leave it there. Michelle, thanks again. We will see you later next week.
Bye-bye.
Bye.